This is Taking Stock on Bloomberg. I'm Pimm Fox. All right, amid the broad-based sell-off today, a major Dow component split itself in two. Kraft announcing that it's going to spin off its North American grocery business and will retain its global snacks unit through a tax-free spinoff to shareholders. For more on this deal and what it says about the company's strategy and its efforts to stay profitable in this uncertain time, we're joined by Robert Moskow. He is an analyst with Credit Suisse. He follows Kraft. Good to have you with us, Robert. Tell us, is this a good deal for shareholders?
Oh, it's a great deal. That's probably why I'm smiling. Myself and a lot of sell-siders have been wanting Kraft to split itself up for a while. We feel it's too big, bureaucratic, and slow. The company's operating much better than it has. It's been making a lot of investments, and they're ready to do this now. And this is the right move for shareholders. It's going to create value.
Robert, how does 1 + 1 equal more than 2? I mean, how does just a sort of corporate split make the company more valuable? Is it just that it makes it easier for sell-side analysts to figure out what's going on?
I think it goes beyond that. But I agree. You know, a lot of investors are asking that question right now. What I think is going to happen is you have two companies with two very different capital allocation strategies. And I think when you're running those companies together, you get distracted. And focused companies tend to operate a lot more effectively. So you're going to have a global snacks company that's going to be allocating capital to emerging markets and creating a lot of value through revenue synergies and growth. And then you have a North American grocery business that is finally operating more effectively because they're able to execute some productivity programs at their manufacturing facilities. They're reinvesting those savings into advertising. It's a slower growth model, but it's a very different go-to-market business. So focus really matters in staples, and this company is going to benefit from that focus.
Now, Robert, is this at all similar to the split-off that we saw in previous years of Altria, where you've got the international business, which focuses on growing markets, and a more stable, more consistent business in the United States? Is that a similar analogy?
I think you could make that analogy to some extent. The Kraft is going to grow faster than tobacco in North America. But I think what matters most here is that you're going to have a company that has already made a lot of investments that it needed to make to become more operationally efficient. And now what you need is you need two separate management teams to execute two very different strategies and not get distracted by the other.
What are you seeing in terms of input costs? That's always a factor for a company like Kraft, whether it be cheese and dairy. What's the outlook for commodities?
Well, they raised it. Commodity inflation is expected to be in the low teens. It was going to be around 8 to 9%. I think most of that's coming from sugar and dairy. I guess the good news for Kraft is that they've already priced through 85% of the categories that they need to price through, and they have a lot of market power. So and they have blue chip brands, and when you have that, you can get the pricing through. There might be some modest delays along the way, but it hasn't stopped them from being able to raise their guidance. They raised it by a nickel to at least $2.25. That gives me a lot of confidence. Not all the packaged food companies have been able to pass through the pricing as easily.
All right, I want to thank you very much. A thumbs up from Robert Moskow of Credit Suisse on the Kraft spinoff.
Great.